Now, this is a copy of the profit and loss account of Gale PLC for the year ended the 31st of 12, 2004. So have a look at that there now. And then we're going to go down and we're going to see where are we getting all these figures from. As you can see, there's not as much detail here as there is in a question 1. This is because these are for publication. So therefore, one of the reasons for publication is that we can compare one company against another in an industry or against somebody else using the same headings. Now, if you look at your turnover of 1880000, that's the sales figure. So tick it off, it's on the credit side. We look at the cost of sales. Now, the cost of sales is made up of the following. Cost of sales, you have your opening stock on the debit side of the original trial balance, 73,000. Tick it off. Plus purchases of 1150 on the debit side. Tick it off. Minus closing stock of 96,000. You'll see that on the credit side of the adjusted trial balance. And then you'll plus the patent write-off of 10,000 on the debit side of the adjusted trial balance. Take it off. So that gives you the 1137,000. So back again now to the question. So that gives us 1880 minus 1137 gives us a gross profit of 743,000. Now look at the next three headings. You've distribution, administrative expenses, and other operating income. Now, in the previous on the theory side of this, I did give you what goes into each of them, but I'm going to do it again here anyway. You probably wouldn't have time in an exam to do it as detailed as this. But just as a learning exercise, it's no harm to see where the figures are coming from. So on the distribution then, with distribution, admin and other income. Distribution on the debit side of the original trial balance, 248,000. Administration costs, 172,000. Grand. Go then to your adjusted trial balance and you come across audit fees, 9,500. Directors' fees, 50,000. We were told to split up the depreciation between distribution and admin, 2,800 and 11,200. The depreciation of the vehicles is 44,000 and the admin expenses are 12,000. Then look at your other income. So we have rental income of 60,000, we have discount received of 13,000, and we have royalties received of 28,000. So that gives us 294,800, 254,700, and other operating income or other income of 85,000. Let's see how that fits in with the answer. I just got spotted confused there. I couldn't find the blooming thing. Now, we have distribution cost 294,800, administration 254,700, and a gain then of 85,000, bringing my operating profit to 278,500. Okay. Now let's have a look now at where do we get our investment income. Our investment income was 11,600 that we had in the adjusted trial balance plus the 10,000 in the original trial balance. Profit on the sale of land, 65,000 on the credit side. It's a gain of the original trial balance. And the interest payable is made up of the 12,000 on the debit side of the original trial balance plus the 4,000 that we had put in on the adjusted trial balance. And that gives us profit on ordinary activities before tax at 349,100. Taxation is the 87,000. You'll see that in the debit side of the adjusted trial balance. And that gives us net profit after tax of 262,100. Now, minus dividends paid and minus dividends proposed. Dividends paid with the 24,000 in the original trial balance, and dividends proposed are the 9,000 plus the 13,000 that we have on the debit side of the adjusted trial balance. And then that gives us the 216,100, which is retained profit for the year, plus profit brought forward on the 1st of the 1st 2004 of 52,000, which is a gain. It's a gain because it's on the credit side. We add both of those together, and that gives us profit and loss carried forward on the 31st of 12, 2004 of 268,100.